Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, January the 26th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. We do not know what the market's going to do. Therefore, we look at what the auction would look like based on who's in control, wait for the market to open up, and then execute the plan that best suits the market. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to. Then we do live trading analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at yesterday. Yesterday, we were looking for a rotational day. We were looking for an open auction. We were looking for a move up, possible failure to break out or a false breakout, and then a rotation down into the 3-day balance that we had, which is now turned into 4-day balance at the 28.40, and then somewhere between there and coming down to the value area low, we were looking for them to start basing and working our way back up. And we said that, and it was opposite for our hypo 2. And we said, regardless of which way it happened, we were looking to get into that rotational day. A lot of major rotations yesterday, and it was, it wasn't easy to trade because of those wild rotations. But we ended up with a pretty decent Gaussian distribution, pretty toothy though because of just the size of the rotations. But ultimately, we closed back into balance, and now we have this incredible kurtosis that's going on in around the 28.40 and a quarter. Very strong balance. This is likely to take might not happen today because it's Friday, but once we do break out of this balance, we're likely to go vertical and go into price discovery again. 2 red days in a row. It's the first that we've had this year. Although, this one being very rotational, but this is also a Mr. Sneaky inside day, after a long uptrend. So maybe the sellers are I wouldn't call it a foobar, Mr. Sneaky, but maybe the sellers are starting to get a little bit more active now that we're up here in the 28.50s. Although on the news, when we take a look at the news, we did have a lot of news come out. We had, I don't know if he's still speaking, but Trump was speaking. We had core durable goods came out at 0.6 versus 0.5. Durable goods order 2.9. Durables excluding defense spending 2.6. The GDP though came out, and that's what gave us our quick little flush down on that news to I forgot what the low was on the news, but we dipped down and the news came out. We were trading at 28.50, so that was our GDP return to the scene of the crime, and we popped right back very quickly. Good trade balance was also a big miss. But real consumer spending was came out as expected, a little bit better, and wholesale inventories came out as expected. Core CPI was a negative coming out of Canada, so that was a miss as well. In 4 minutes, we've got the Bank of England, Carney, speaking, and we've got Kuroda from Japan in 4 minutes, and we've got 10:30 the ECRI weekly, and then at 1 o'clock we've got the rig count. And that's it for the news today, except whatever still comes out of Davos at the conference there. So just taking a step back, I always like to start my day taking a look at a macro and just using a simple candlestick chart. I'm hoping this doesn't, I didn't want that. Start with monthly. And I use a 9 EMA, 20 SMA. What I'm doing is I'm looking for slope and separation. You know, what's the strength of the trend? You know the drill. And you see that this month is just incredible. Our month open was 26.75.75, and you know, we're trading at 28.50. So and we don't have a lot of days left in the month, so not likely going to see a negative month, and this has just been incredible. Going to the weekly, our week is the same thing. Now our week open was 28.04. Our week low is 28.02. So if we're looking at weekly critical mass, our weekly critical mass, off of the open is at down here at the 25.25, and then our weekly upside ATR target, our 20 period full session ATR, is running at 37.662. So off of the low of 28.02, our ATR target has already been achieved down in that 40, and here we are trading at the 50s, and we're only trading off of off of the all-time high by just over 4 points. So are we going to have a possible new all-time high? It certainly looks like that's a possibility. But going back to the macro, we don't even begin to challenge the weekly trend until we get down to the 27.35. So, I mean, this is just incredible. Going to the daily, even though we had, two red days in a row. This one so far is positive. We opened at 28.41 1/4, and we're trading at 28.50. Good slope, good separation. Trend is very much intact. We don't even challenge it until we get down into the 24.25, at which time that would get us close to getting back below the critical mass. But I think that critical mass has already kicked in. There's not a lot of chance that we're going to get back below the 28.04 when we're trading 45 points. It's possible, but it's not likely. Going to the 4 hour, you see that we had some consolidation here and some two-side trading, but we're holding the 9 and the 20. We've lost some slope and separation, so the trend is struggling right here. It's not being violated, but it is struggling. Going to the 30-minute. Here you can see the dip on the news, and we dip down, down to the 28.47.50 on the news, and then pop right back up, and we're near the Globex all-time high. So just going back to quickly to the structure, levels that we want to pay attention to. Well, obviously we've got a CLVN here at the 50.25. It's really 50, yesterday's high, that I'll be watching. But there's a more important level, and that's this LVN. You take a look at the overnight session. Of course, you can see again as our range is expanding, because our 20 period daily ATR is running at 2163. It continues to expand. You can see that evidence of price discovery, getting ready to happen as the OTF gets involved and takes positions. You can see they're very active in the Globex, and I always talk about that. That's one of your first clues that you're going to get the breakout, as is when the volatility increases and we get the larger rotations and we get larger range in the Globex, and you see active OTF, other time frame participants, being active in that time frame. Europe has been very active this whole week. And you can see that inventory overnight is basically 100% net positive in time and value, time and price, I should say. We got a double distribution, and this is what I wanted to talk about. This is going to be our over-under line right here at the 28.47.50 area. Not only is it the double distribution on the news, okay, that was the swing on the GDP news, and then we pop right back up. We haven't had a VPOC shift yet, but the VPOC is higher overnight at the 28.45.75 as it was last night. Remember, last night's yesterday's Globex VPOC was higher as well. So just start moving our numbers over. Our overnight high obviously is still intact at 52 and a quarter. Our overnight low is at 41. This is going to be my over underline. And when I say over underline, really what I'm talking about today is whether or not we possibly take a trip down into the microcomposite VPOC back into the middle of yesterday. This is a valid value area. It's actually fairly large. Now 45 right now is our VPOC, 45.75, and our value area is right there as well. So there's going to be a trade level here. This would be the first possible spot that I would look for them to bounce if we get inside of that LVN. I would expect them, I'll be targeting the 45 as my first major target, and then see if we bounce off a value and continue, or break down and come inside of the value area and come down to the microcomposite. Because this is a valid value area, okay, the downside is 36, and then 30.75, and that's about it. We still have a zipper measured move at 58.50. Let me just, I'm sorry, that one was invalidated. This one we already hit. All right, so that zipper measured move is no longer valid. And in terms of other measured moves, I have another one up at 73.50. We still have one at 62.50, and we have one at 73. 73.50. This first one goes from December 29th to January 9th to January 10th, and this one goes from the 29th to the 9th to the 10th, extended at 1.5. So in terms of hypotheses, we're going to be opening just inside of range but outside of value, or outside of range, outside of value, nothing really changes. I am leaving equal opportunity for my hypo 1 and hypo 2 because we're starting to see two-sided trading. But for the most part, because of the overnight inventory being 100% net long, I'm looking for rebalancing. So I'm looking for an open auction just out of range or just inside of range, a move down towards the 47.50. See if they bounce from there. If they don't bounce from there, look for them to come down to the 45. So really, I'm looking for the first bounce to happen, if it's going to happen, between the 47.50 and the 45.50. If that doesn't happen, then I'm looking for a deeper move down into the 40, maybe even into 36. Ultimately, though, I'm looking to work our way up, making new. I take out the overnight high and go up and take out the all-time high and make a new all-time high, and basically go sideways up here, fighting the range high from yesterday and the range high from Wednesday's moved new all-time highs. So that's hypo 1. Hypo 2 is the opposite, is open auction, just in range, failure to get below the 47.50, push up early, make a new all-time high, find responsive sellers and start working our way back down, and then fighting and going sideways between the 40 and the 50, and basically going sideways and drifting up into the close of Friday based on critical mass kicking in. Hypo 3 is a open test drive. Again, quickly move down, failure to get below the 47.50 or just dip below it. But this one gives us extension and a move up into the 62.50 area. Our daily ATR is running at 21.63, so off of the low overnight of 41, our upside daily ATR is up at 62.75, which is just above our measured move. And off of the overnight high of 52.25, our downside daily ATR is down at 30.75. So just one, or right on yesterday's low. All right, so hypo 3 is, open auction just in range, just out of range, fail to get below 47 or dip below it, and then a strong move up to make new all-time highs, base up here, and then push through to the 62 area, and then basically finding responsive sellers and rotating us down and closing somewhere in the 55 area. That is my hypo 3. Hypo 4 is a failure to take out the all-time high, find strong responsive selling down into the 40, chop around in the 40, make a trip down through value, failed to hold the value, and push through down towards the 30 to 25 and close somewhere down here. Maybe even push through to the 22-20 area as a failure Friday. That's not likely the way this market is trading, but you never know. Going to gold. Boy, gold has been getting some larger rotations on the intraday, but ultimately, we went in and we got up to the 65 area and failed and came down, and now we have a 3-day micro composite above the breakout of the value that we were in. But we're below the 53.40. Remember, we said if we had 55 didn't hold, look for them to come down to the 53s, and then if 53 doesn't hold, we could get move back down towards the value area high in that 38.39 and down back into the balance we broke out of in around that 34. That's what it looks like it's going to do. The levels to pay attention, if we can get back above the 49 area, look for them to push up into the 53 again. Any breakout above the 55 area, then I'd be targeting a trip through value up into the 61 area. But if we fail to hold this, then I'd be looking for them to come down and test the overnight low, which is down at the 43.70. And if that doesn't hold, they move back to test this 38.39 area. So a little bit winded there. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.